Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about ASYMCHEM interim report. ASYMCHEM Laboratories, Tianjin Co., Limited, offers a diverse range of services across various industries. Some of the key businesses and services provided by the company include Contract Development and Manufacturing Organization, CDMO, for small molecule drug products, ton-scale manufacturing services for registered starting materials, advanced intermediates, and active pharmaceutical ingredients pre-formulation and formulation development, chemical macromolecule CDMO solutions for polypeptides, oligonucleotides, glycans, toxins linkers, and other macromolecules biosynthesis solutions, biologics CDMO solutions for monoclonal antibodies and antibody-drug conjugates, contract research organization solutions, messenger RNA solutions, pharmaceutical analysis and testing services, medical research and development manufacturing, sale and development of medicine raw materials and relevant products, sale of drug products, wholesaling and retailing of drugs, import and export, trade information technology, technology development, research, and experimental development activities. The ASYMCHEM stock price has skyrocketed by over 124% in the past year due to several key developments. The launch of a new OEB5 high-potency drug facility in July 2025, which enhances the company's large-scale HPAPI manufacturing capabilities, has been a significant contributor. Additionally, the opening of a European development and pilot manufacturing plant in August 2024 has met growing demand for pharmaceutical services in Europe, while securing major contracts worth billions of dollars has further boosted investor confidence. The company's share buyback programs have also signaled management's confidence in the company's future prospects, potentially boosting earnings per share. These factors combined have driven ASYMCHEM's stock price to new heights. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth drivers: deepening cooperation with major clients and expanding into emerging business segments. Strong track record in project delivery and a diverse, high-quality customer base. Significant increases in revenue from emerging businesses, chemical macromolecule CDMO and drug product CDMO. Increased gross profit margin due to higher sales and lower expenses. Revenue decline drivers: reduced collection of trade receivables and decrease in USD-denominated sales due to renminbi strengthening against the USD. Decrease in purchases from related parties. Net income and profit margins have experienced significant growth over the past year. Net income has increased by 23.71% from RMB 499,131 to RMB 617,470, while adjusted net income has seen an even more substantial rise of 57.5%. This increase in profitability can be attributed to several factors, including a boost in revenue and cost reduction initiatives. Profit margins have also expanded across various business segments. The gross profit margin for the company's total principal business increased by 2 percentage points to 43.28%, while the emerging business saw a notable rise of 9.3 percentage points to 29.53%. These improvements in profitability are largely driven by more focused R&D investment direction and cost efficiency measures. The growth in net income and profit margins is a testament to the company's ability to adapt and improve its operations, ultimately leading to increased financial performance. The company is indeed generating positive operating cash flow, as evident from its net cash inflow from operating activities of RMB 701.72 million. Furthermore, the increase in cash and bank balances by 17.36% from December 2024 to June 2025 indicates a steady improvement in the company's financial health. This trend suggests that the company is successfully managing its finances and generating sufficient cash to support its operations. The company's financial performance reveals a notable shift in its debt and interest expenses. Despite maintaining a steady debt level, the company has seen a substantial increase in interest expenses, rising by 147.67% from the previous year. Furthermore, the amount of interest paid has also significantly increased, from RMB 25.28 in 2024 to RMB 62.61 in 2025. This indicates that the company is now bearing a heavier burden of debt-related costs. The company has reported a mixed performance across various regions and segments in the financial summary. Regions that performed well include the UK, USA, and China, which showed significant growth. In terms of segments, emerging services, small molecule CDMO market, peptide production, oligonucleotide production, and biological macromolecules CDMO business all demonstrated strong performance. These segments have exceeded expectations or achieved notable milestones. However, there are some areas of concern. The Shanghai region performed poorly, with no specific information provided on the reasons for this underperformance. Additionally, the Taixing project's investment return on investment was expected to be lower than anticipated, indicating potential underperformance compared to other projects or investments. Management's outlook on company strategy. The company's management is optimistic about the future outlook, driven by several key strategies. Firstly, the implementation of an automation plus AI-driven enzyme evolution platform in over 20 projects has shown promising results. Additionally, cost reduction and efficiency improvement initiatives are underway to leverage market cultivation and synergies from major clients. Revenue growth trend is expected to continue due to increased revenue, with a notable 24.52% net profit increase in 2025 compared to 2024. The company aims to maintain its market leadership in small molecule CDMO through technology innovation and customer-centric business philosophy. Emerging services segments, including peptide and oligonucleotide, ADC, conjugated drugs, and payload linkers, are expected to drive growth. To achieve this, the company will invest in R&D initiatives to maintain technology leadership. Overall, management is confident that these strategies will propel the company forward despite market conditions and industry recovery. The company has a history of paying dividends to its shareholders. In fact, it has been declared that the company has paid dividends in both 2024 and 2025. Specifically, for the 6 months ended June 30, 2025, the company declared a dividend of RMB 395,066 with a per share amount of RMB0.1. This demonstrates the company's commitment to returning value to its shareholders through regular dividend payments. Concerns about inventory buildup and supply chain disruption. The company's financial summary highlights potential issues with inventory buildup and supply chain disruption. Specifically, order backlogs have increased significantly across various segments. Chemical macromolecule CDMO business saw a 90% surge in order backlogs period on period. Drug product segment experienced a 35% increase in order backlogs. Biological macromolecules CDMO segment reported an over 60% rise in order backlogs. These concerns are also reflected in the company's cost of sales and selling and distribution expenses, indicating potential strain on resources. That concludes the financial summary for ASYMCHEM. Feel free to comment below, and I will be happy to answer them when possible.